As always, guys, this is just for entertainment purposes only. This is not financial advice.
Hey guys, and welcome back to my channel. Intel reporting earnings, and because I was a little bit sick and my throat hurt a bit, I couldn't actually create a video on this yet because I for sure have an opinion about this. I'm an Intel shareholder, and as an Intel shareholder I want to show my perspective. Let's just say that this reminded me of Poltergeist that I looked when I was a child. This scared the shit out of me. Really, I'm scared when I see these earnings. We see here client computing down 25% year over year, data center 16% down, the network and edge is up, accelerated graphic and computing system up, and mobilize up. But these three, they're much smaller sections, and it's great that they're growing. But the client computing, that's the chips, and these are so important. And when you look at the PowerPoint, the income, it's not even mentioned there. Look at that for the chip, for the client computers, operating income down 43%. The data center down 90%. AMD is really taking over market share there. There is a little bit hope when you're looking here. Mobileye doing really well. 41% year over year growth. 40% growth for operating income. If you remember Q1, I think the growth was like 5%. So I think it has a lot more to do with the fact they were preparing for an IPO for Mobileye. So they were moving a little bit contract from Q1 to Q4 to pump a little up a little bit. So I'm I don't know if this is sustainable growth, but I do like Mobileye. I believe in Mobileye, but it's just right now with 190 million in earnings, it's only really small part of what they are doing. There is a little bit of hope. Intel 7 is now shipping. Intel 4 ready for production. Intel 4 is quite important because it can actually make a fist against AMD. I'm not going to claim it's better than what AMD currently has, but actually it is much more competitive. And of course, the true market leadership, what we're waiting for, Intel 3, Intel 20A and 18A are all at or ahead of schedule, especially 18A. This is really fantastic. This is coming in 2024, 2025, something. I have the roadmap here somewhere. And at this point, Intel would have regained market leadership. But right now, Intel 4, it's really important that they ramp up production. In the earnings call, I listened to it. They say Intel is ready for volume production second half of this year. But they also said that the large volumes are not going to start until next year, so beginning of 2023. So it's a long time that we can see negative sentiment. And when we look at what the analysts are predicting, it's not so good. So we're seeing a total collapse here of the earnings this year. We're seeing collapse of the cash flow. We're seeing collapse of the revenue. So we're all going back to 2019, maybe even 2018 numbers. This is really devastating for shareholders. It means that Intel might be overvalued. Like a stock that is going in decline, it is overvalued unless it can pick itself up again. And I think that's a big question. Intel, it's a turnaround bet. You're betting on Pat Gelsinger if he can turn the company around, if Intel can become market leader again. And even though they have a terrible year right now, and AMD is gaining market share like there's no tomorrow, we can see that, they are ahead of schedule or on schedule of all the programs that started since Pat Gelsinger joined. So the programs are currently late and are not doing well are programs that were probably already set in motion before he joined. So that's pretty good. I do think the company will turn around. But I do fear we might see a few more bad quarters before that happens, and that will negatively affect the stock price. If you want to buy Intel, I am not going to tell you what to do, but you should do this. You should subscribe to my channel, like this video, and comment about what you think about Intel. You're really helping my channel with this, guys. So I also like to have a look at the valuation of Intel. It's not easy to value a company that the estimated growth according to Analyst is minus 8.6%. I have 10 flags that I look at. I look at price to sales, price to earnings, debt to equity ratio, dividend payout rate, gross margin, net profit margin, growth, buybacks, and insider selling. If this is all green, great. If there's some red or some orange, I usually would not buy a stock that has any red, to be honest. If there's some orange, it's quite okay, but usually I would avoid to buy a stock that is red. Now Intel, the growth turnaround, they're no longer growing. I already own the stock. Now, according to analysts, the next 3 years they will drop 8.6%. That's extremely painful, especially this year is going to be extremely painful. I believe the analysts. I think the analysts might even be underestimating the downfall that Intel is going to do. But what is Intel going to do after those 3 years? I think by 2025, now we've seen that they're still on track to regain chip supremacy. So will they go then? Will they make a jump in 2025 back to their cash flow that they had? Now, I've put in some conservative growth numbers. I mean, I put in 35%. It's extremely conservative from 2025, basically. They used to be at like, what was it? Was it 10 billion cash flow? So here they're going to jump with 35% growth at 2.1 billion cash flow. Guys, it's not super high. I do think, yeah, we'll have to see. We'll have to see. If I put in potential growth numbers, 5%, I get a price target of 7.5. It basically means that Intel hasn't turned around. 20%, Intel has not turned around. 35%, Intel has turned around. And I think the 35%, if Intel managed to turn around, is extremely conservative. I do think if you also would include the dividend, that I would even consider the stock price to be higher, considering if they would sustain the dividend, then basically it would be a dying company with a dividend if it just grew 5%, because they would hardly have any money to invest in growth. But they did mention they would keep investing into the dividend and keep growing the dividend. So what's my move? Yeah, Intel is probably the worst or most risky stock I have in my portfolio. I decided to hold it for the main reason that all the programs since Pat Gelsinger came on board are still on track. That's Intel 3, Intel 20, and Intel 18. So guys, I will be holding, but I'm probably not going to enjoy the next quarterly updates. I will keep following this stock and keep you posted of what I think about it, where it's going, and if anything would changes at my thesis, I will let you know. And do remember, Intel is giving a dividend of 4.1%. That makes it a little bit easier to sit through these hard times for Intel. They've been around for ages. I really don't think they're going away. Chip, it's cyclical. Sometimes you win some, sometimes you lose some. Guys, thanks so much for watching. If you like my videos, please like, please subscribe, and see you next time.